The Bank of Israel is expected to leave rates unchanged at today's central bank rate decision meeting, as the Monetary Policy Committee meets for the first time without long-term Governor Stanley Fischer. Yaniv Pagot of Ayalon Group in Israel is on the phone with me now. Firstly, Yaniv, what are your expectations for today's meeting? Will the Bank of Israel choose to keep interest rates paused? And in your opinion, what are the drivers for this decision?
Yes, we think that the Bank of Israel won't decrease the interest rate in this decision. I think until the end of the year, maybe in the last quarter, we'll continue to decrease the rate to 1%. Now it's 1.25%. And the reason is we have a problem with increasing housing prices. And Bank of Israel can't decrease the rate more before the government will take care of this problem. The government have to increase the supply of the houses, and until the government don't do something, the Bank of Israel will have to wait.
The central bank is expected to remain without a leadership until October, following the stepping down of veteran Governor Stanley Fischer. How is this likely to impact central bank policy in the coming months?
I think the fact that we don't have a new governor still is not helping the market, because we don't know the vision of the new government. We don't know how he will act in the foreign market currency. We don't know what he thinks about the growth strategy, and it's not helping to the market. But I think, as I said before, that in the final quarter of the year, when we see what's happened in the world, if the market, the momentum in the market is still positive, so you don't have to decrease the rate. You have to remember that the inflation in Israel is very, very low. We forecast that the inflation in the next 12 months will be 1.6%. So the bank can decrease the rate if he wants to, but right now he won't do nothing. The budget is also very, very good. The deficit has to be only 3% next year. So if the bank wants to decrease the rate, he can do it, but he won't do it until we have a new governor.
Yaniv, what role has social unrest played in Israel's economic performance? Not just the recent protests within Israel itself, but also the social unrest in neighboring Egypt, including the ousting of former Egyptian Prime Minister Morsi, a figure who played a large role in the truce proceedings.
If you look at the premium risk of Israeli 10 years bonds relative to the 10 years of the treasuries, of the U.S. treasuries, it shrinks from 180 basis point to 120 basis point in the last few weeks. So when all the thing in Syria, in Egypt is happening, the premium risk of Israeli bonds shrinks. And it shrinks because the budget is very, very good. The inflation is very, very low, and we are not. We know we are in the Middle East, so all the what's going near us, we used to it. The proportion of foreign investors in the Israeli bond market is very, very small. And you have to remember that the Israeli economy will grow in this year something like 3.5%. Next year, 2.5-2.7%. Relative to the euro that it shrinks, the eurozone that it shrinks, relative to the growth in the US that will be under 2%, and the emerging market that it's cooling, it's not so bad. So I think the economy is quite good. About the social unrest, I think that it's maybe the corporate in Israel will earn less because of many regulation and reforms that's making in the many markets in Israel, but it won't stop the Israeli economy from growing something like 3% in the next coming 12 months.
With all of this in mind then, what can we expect from the Israeli new shekel in the coming months?
I think if the Fed will make the exit strategy and stop buying bonds, so that from the US dollar will be more get strength in the world, and if the dollar in the world will be more strong. So I think the shekel, it will be also in the shekel US dollar market. If the Fed won't stop buying bonds, so I think the shekel will continue to be strong, and the Bank of Israel will have to buy more US dollar in order to make the shekel more weak, because if the shekel will continue to be strong, so the Israeli export will have difficulties, because in the all the world, everybody helped their currency to be weaker, and we see what's happening in Japan. And if the Israeli exporter will not get help from the Bank of Israel, so they will have problem, and the growth rate can be weaker.
Yaniv, thank you very much. I'll be back shortly with a look at what events will be moving currency markets this week. Goodbye for now.